we've seen a lot of activity, I would say, in general around. I think it's becoming more and more challenging for a lot of companies to be competitive if you're, solo, trying to compete against larger groups.
Welcome to a brand new episode of the M&A Mastermind podcast presented by Cornerstone International Alliance. I am your host, Nick Olsen. On this show, I get the opportunity to talk with the brightest minds in lower middle market M&A. Together, we discuss industry intelligence, deal management, shared successes, specialized expertise, and much more. If you serve the small to medium-sized business owner, this show will offer you tactics and insights you can use and implement now to become a master in M&A. Hello, everybody. Welcome to a brand new episode of the M&A Mastermind podcast. My guest today is making his second appearance on the show. His firm, Confederation M&A, is based in Prince Edward Island, Canada, covers the whole east coast of the Canadian market, a member of Cornerstone International Alliance. He is a very active individual, loves being outside with his family, being active and exercising and maybe doing some CrossFit. A world traveler, has visited over 30 countries and has his master's degree from Lancaster University in the United Kingdom. Please welcome back my guest today, Jeff MacKenzie. Jeff, how you doing?
I'm doing great, Nick. Thanks for having me back on the show. Appreciate it.
Awesome. So I came across this topic idea. We're going to talk today about just M&A trends in Canada, what buyers and sellers should know. But I think it's very important for not only our Canadian listeners, but also our US-based listeners to understand what you guys are seeing. We've had a lot of conversations within our alliance about, what is it like, from the Canadian perspective with all the uncertainty, over the last 12, 18 months, the election, the tariffs, all that sort of stuff. And so just want to check in with you and you guys and just see where everything's at. I know you put out a great LinkedIn post, so make sure to follow Jeff on LinkedIn. He just about, what we're going to talk about today, just the state of M&A in Canada, the things that are going on, the things that buyers and sellers need to, be aware of, navigating these somewhat choppy waters. And we're going to dive into that here today. So, uncertainty is the word, right, Jeff? Last 12, 18 months, it's been a lot of uncertainty. How have you guys, from your firm perspective, over the last 12 to 18 months, how have you kind of weathered that storm of uncertainty internally?
Yeah, you hit it right in the head, Nick. Uncertainty has been kind of the key word chucked around this year. And I'll just start by saying that as I talk to colleagues across the country here in Canada, but also down in the US and many of our other Cornerstone members, I think you'll see that, a lot of the same things are happening north of the border or south of the border this year. And I think that uncertainty is felt on both sides. There's some nuances with that we can talk about within Canada that might be unique to this country. But, for sure, uncertainty is the enemy of business and planning and just makes things difficult, when you're running a business to plan ahead. And especially if you're looking to sell a business or plan for an exit and trying to, time that as just throws an additional element into the mix. So I'd say if I think back to, you asked about the last 12 to 18 months. If I think back to kind of late last year, early this year kicking off, there was generally a sense of optimism, I would say, in the market that we came out of a period that we've been in for the last couple of years where it's been a higher interest rate environment. I think that's in both countries. We're kind of years out of, say, the COVID pandemic sort of era where you saw a lot of businesses have some impacts from that and from shutdowns. And so we've kind of had a bit of stabilization there in terms of, at least in the financial results, of knowing how companies fared coming out of that. So start of this year, interest rates had come down. Things seemed to be a little bit more stable. And we were expecting to see a kind of all signs pointing to a busy year with M&A activity in the market. Election changes, political activity on both sides. President Trump came into office in January there. We had an election in the spring. It didn't end up being change of a government party, but new leader. And just with that comes some uncertainties in how things will look. And you used the T word earlier, tariffs, and that's kind of been a key word here. Over the last number of months that we've just been dealing with is the uncertainty around trade and tariffs and where that might land. has definitely caused some uncertainties with business owners and buyers and deal activity. So we kind of saw I would say in the spring and summer, more sluggish activity than expected. Kind of some wind taken out of the sails and that optimism that we saw early on in the year. Just while buyers who, if you're planning on buying a business or working through a transaction and you don't quite know what impact that might have on the financials and want to wait to see how the outcome of trade negotiations go, we saw some buyers hit pause on activities. We saw some sellers who might have planned to put their business on the market be advised to hold off, or wanting to hold off until they see things a little more stable. And we saw banks, frankly, more conservative with those factors too on a lending front. So sort of a slowdown middle of the year. Now, that being said, heading into quarter four, we are seeing a sense of some pickup in activity. And I think although trade and tariff discussions are still ongoing, we're seeing, some sense of, I'd say, a sentiment of just wanting to get on with things from both buyers and sellers. I think change is a new normal. We're in this world where if you're waiting for a perfectly stable environment, you're probably never going to get it. So there's certainly some pent up demand and activity that's on the horizon, and I think we're starting to see that in quarter four now start to pick up and get rolling.
So by pick up, you mean sellers have more of an appetite now to go to market, or what are you seeing in maybe the clients that you're working with or people you're talking to, as far as just are the multiples now better? Are they getting the amount of cash at close or whatnot? I know we're going to talk about deal structure in a minute too, but what are the factors that are bringing these sellers maybe, all right, now it might be a better time? Is it just the optimism? Is it the less uncertainty, or what are your thoughts on that?
Yeah, I think interest rates are a factor, and a little bit of stabilization in the market. But generally, if I go back a few years in 2021, 2022, the market here was generally considered to be a decent seller's market. There wasn't a ton. If you think about supply and demand, there wasn't a ton of businesses on the market of a certain quality in the mid-market, and still a lot of sellers looking to put money to work. So we were seeing multiples, pretty good in 2021, 2022. We really saw that, some compression in that in 2023, 2024, that as interest rates go up, it just makes it more difficult to be able to pay sort of top dollar and bridge some of those valuation expectations between buyer and seller. So we saw some slowdown and some compression in multiples, not significant, but a business, let's say, that might have traded at 5 times earnings, maybe you're seeing a 4 or 4.5 times. So a little bit of compression on valuation. We're starting to see that come back up. And I get asked all the time, are we in a buyer's market? Are we in a seller's market? And it's a tough question to answer because, just this week, I read 2 different articles, one trying to convince people we're in a buyer's market and the other trying to say we're in a seller's market, and both from quality sources. It's really tough to know exactly where we are. But in general, I would say what I'm seeing is that the environment's shifting towards being a bit more of a favorable seller's market again. Capital is abundant, lots of private equity, family offices, strategics that realizing that just growing through organic means isn't enough, that looking for strategies for growth. Capital, a little bit cheaper and has been stable for some time now on the interest rate front. So I think that all those factors sort of considered, that sellers are feeling like if you were holding off the last couple of years because it was a bit of a down environment, I'm starting to see some decent multiples and activity again, and a lot of buyers being, more aggressive with pursuing opportunities to try to have that, again, organic growth strategy in addition to an organic growth strategy. The last point I'll say is just, I think on this buyer and seller's market item is, I think the good news there is I think both are on a supply demand side, both are moving up and to the right. So I think we're seeing supply, of businesses moving up, but we're also seeing buyer activity move up. So the question there is just which one is kind of tracking faster from a supply and demand perspective. But I think we're both seeing, the demand for businesses go up, and then the supply business is also moving that trajectory as well. So that's a good sign, I think, an indicator of activity to come.
And we, like I said, we mentioned uncertainty. It seems like that's the new normal. Just, we don't know what's going to happen. What are you advising your, the businesses that you just referenced? What are you advising them to do during this time of uncertainty? Maybe to, better handle it, to not have to say, no, we can't sell now because of the uncertainty. But what are some, things that you're saying that, these business owners should do that they can control?
Yeah, it's a good question. I think one of the biggest things we've been trying to keep our clients focused on, or individuals who are businesses that are in the preparation stage of getting ready for an exit or investment, is to really focus on the fundamentals and what's within their control, as opposed to worrying about external factors and environment. We've, just in the last 5 years have gone from COVID to, a number of global kind of wars and tension that disrupt supply chains, to interest rates and all sorts of different factors, and now trade and tariffs. There's always going to be something. And if you're trying to wait to time the market perfectly, it's very difficult to do. What you're much better off doing is focusing on, what are the risk factors in my business that I can work on that are going to de-risk myself, make my business look more attractive on the market. So that might be diversifying your customer base, focusing on revenue channels and how to make more recurring revenue with Class A type of clients, diversifying your supply chain, bolstering up your leadership and your management team. There's a whole bunch of different factors there that you can start to focus on within your control. Because I think no matter what the environment that we're in, whether it's a buyer or quote unquote a seller's market, it's always a good market for good, well-prepared businesses. If you have a good quality business that's well prepared for an exit, it doesn't matter whether you're sort of in a buyer or seller's market, there's always a really strong demand for good, well-prepared businesses. And it's a shame to see some businesses not be able to sell or transact for what they might be able to, because they haven't taken those steps in advance to kind of work on things within their control. So I'd say that's the biggest thing we're kind of focused on, is really just going deeper into a specific business's scenario, hopefully having a bit of runway with them in, the year or two lead up to sale, to help them prepare effectively for what they can, and try to, you don't want to completely put on the blinders, but sort of, spend a little less time listening to all the noise out there and more time sort of zeroing in on your business and what you can control.
Trust your M&A advisor to help you out with that, because you said,
Absolutely.
don't listen to the noise. We'll take care of the noise for you. But what are you, we talk about businesses coming back to market. It looks like Q4 might be good. Going into 2026, there might be some positive activity and whatnot. Are you seeing, more of clients who were put on pause coming back, or new clients coming, your pipeline filling up? Like, what are you guys seeing as far as businesses coming to market, or even having the conversation about selling?
Yeah, it's a bit of both for sure. We've had a number of conversations this year with business owners that have been on our radar or having discussions over the last 5 years with, that for various reasons decided not to move to that stage yet. It's whether you're a retiring business owner looking to sell, or you're a business owner looking for investment, private equity capital, whatever your situation might be. It's not a decision that happens overnight too. So, a lot of times we're talking to these entrepreneurs groups for years. So definitely an element of, of people coming back around, but new clients too. And talk about Canada specifically, and this might be a situation US is going through as well, but demographics wise, we have a huge baby boom called the baby boomer generation of 65 plus year old business owners who will be needing some kind of exit strategy in the next number of years. And there hasn't been the younger working population demographically sort of coming up to take over those businesses. So I think that it's a real challenge to try to find succession plans for all these businesses. All the more reason to lean on advisors and make sure you're preparing effectively. There was a stat I was reading recently by a Canadian Federation of Independent Businesses that mentioned statistic that it was 54% of businesses that had planned to retire over a period of time were unable to find a succession plan for their business. In other words, they weren't able to sell their business. They weren't able to, find a suitor, which if you kind of step back and think about is pretty astonishing. You're talking about the majority of businesses, just over majority, but the majority of businesses, forget about trying to talk about maximizing the value of your business and things like that. We're just talking about getting any value for your business, just being able to make it change hands and find a succession strategy. So as you step back and think about that, we're focused on helping business owners get the best value and hopefully maximize value, but it is also just about getting a fair deal and fair terms and making sure it can transact at all in the market. So a lot of activity in the horizon, but a matter of setting those up well so they can actually get it across the finish line.
54% was way higher than I would have guessed. But do you have any thoughts on why that's such a big number? What are these businesses facing that might not make them even sellable at all?
Yeah, I think one factor is there's in that group. I mean, there's no doubt Canadian economy is largely fueled by a lot of small businesses, a lot of owner operator businesses that are built up, and you have the big the big guys for sure, but as a lot of the smaller owner operator businesses and kind of the lower end, the low to mid market, those are the ones that have more challenges. And I think as we talk to clients who are in that space here in Canada, a lot of it, and this is what pains me a bit, is there could have been things that they probably could have done to set themselves up that it could have transacted. But if you have, Nick's HVAC business that you've started and run for a number of years, and you've never really matured that business to a level where Nick is able to remove himself from the business and the business can still run, and you've transferred that goodwill from individual to the company, you've built up the leadership team, you've put in place processes and systems to create something in that business that somebody's willing to pay for and buy. Well, if you haven't taken those steps, I think those are the ones that tend to have challenges in moving. It's somebody's livelihood, somebody's retirement. You always hope that there's a solution there, but if there's not, then unfortunately you see some that you have to sell off their assets, or it's been a great career for them, but have to shut the doors. So that's what we don't want to see. We want to make sure businesses are set up to get value, from the hard work that they put into the business and be able to transact. So all the more reason on some of the stuff we talk about of planning ahead of time and making sure to lean on your advisors.
It's hard when you're the business owner, it's hard to, have that forward thinking mindset of, I've been doing this for 20 years. I don't plan on selling for another 10, but even now I still have to prepare to sell. I always got to be ready to have that, that option at least. And it's just going to, better put your company in a better spot if you have that mindset. And it's just, what do you think is the main reason or reasons that a business owner doesn't plan? Like, what do you just in your experience, why is that? And what advice would you give them to overcome that issue or issues to make sure that, you need to forward think, you need to be ready, because you never know when that time's going to come when you might have to sell.
Yeah. The biggest reason I would say is business owners tend to be extremely busy people. It's tough to take time away from the business and step back and take those planning steps. I think the intent is there, and I think a lot of business owners know that that's valuable, but it's a kicking the can down the road type scenario. You're dealing with problems of today and maybe fighting fires or what's on the horizon week to week, and the idea of that I'm not going to sell for 10 or 20 years, so I'll worry about that later. We'll think about it next year. We'll think about it next year. Keep putting it off. But we're seeing more and more often business owners who don't expect to sell. So maybe it's somebody in their 40s, 50s. They're initially thinking I'm going to sell when I retire. Getting approached earlier on, and it's not something that was on the radar, but a really good opportunity might come up. And something they didn't consider. You might have a private equity investor who is doing a consolidation play, rolling up companies in a sector, trying to build a national platform. They approach you, and for whatever reason, you're a great add-on, for what they're building. And it's sort of a once in a maybe lifetime opportunity, or, it's just a great time. And if you're not prepared, you could really miss out on a great opportunity or a better valuation than you might have been able to get. So we're really trying to work with people that, yes, even if your intent is to not exit for some period of time, be ready, because you don't know when something's going to, come through your door. It's the old saying of everything's for sale for the right price sort of mentality. Like it's, yes, it might not be technically for sale, but you want to be ready. There's a beauty is a lot of the stuff you do to get ready for sale is stuff that's good to do for your business, even if you're not planning on selling. Diversifying your customer base or increasing your revenue or help, bolstering up your leadership team. Those are good practices for preparing to sell your business, but they're just really good practices for running your business anyway. So, why wait? You should get started on those things right away. And then that way, if somebody does come knocking on your door, you're prepared and ready to go, or at least entertain those discussions.
This episode of the M&A Mastermind podcast is powered by Cornerstone International Alliance, where leading M&A firms come together. As part of this international network, you get access to global opportunities, over 200 M&A experts, enhanced collaboration and knowledge sharing, and some of the best M&A tools and resources available, all to help you take your firm to the next level. Ready to join this exclusive network? Visit cornerstoneia.com/new member today. I mean, that's great advice, and I think that and I know you guys do a great job of educating the business owners that you come into contact with to have that consideration and that mindset. Just because it is just good business practice, it's going to improve the value of your business. It just makes a lot of sense. But what are some of the we talk about M&A, in the current state. What are the common or what are the leading sectors in the Canadian market right now that are thriving, that are doing really well, that maybe there's a big buyer appetite for, maybe, things that, areas in which, you're seeing a lot of success?
Yeah, there's a few that come to mind that have had a more activity this year, been particularly, busy, and overall volume of transactions has been down. But if you look at the stats, at least in the low mid market that we track for dollar value of transactions, it's actually pretty similar or on track, even though the volume's down. So it tells you that some of the transactions that have happened have been larger ones that kind of add to the total. But a few of the industries, we've seen a lot of activity, I would say, in general, around industrials. So, manufacturing, distribution sectors, and a lot of that driven by consolidation, private equity investment. I think it's becoming more and more challenging for a lot of companies to be competitive if you're, solo, trying to compete against larger groups. And there's very, natural synergies as you become bigger in terms of, running a company, or, how you can find customers and suppliers, and just some advantages of being bigger. There's no doubt there's been lots of consolidation, kind of roll-ups in industrials very broadly. A couple others, I would say tech is still tons of activity in tech. I'm sure that's a global phenomenon, but with AI and cybersecurity, lots of attention on SaaS companies, software as a service, that there's a ton of activity, and it's just changing so fast that there's a lot of dollars flowing in that way. Infrastructure and energy is one in Canada too. I would say we're seeing some pretty large transactions and momentum on. Canada's a massive country, geographically. I think the second biggest country in the world after Russia, and we have a lot of natural resources here in the country. And there's a real energy transition that's been happening over the last number of years. Traditionally, we're still very strong in oil and gas and some of the traditional energy sectors you think about. And I think that'll still be a factor for a number of years, but also, green energy and renewable energies, lots of investment and infrastructure spending being put there. With the new government this year, there's been some efforts with all the provincial leaders to identify, what they're calling nation building projects, of larger infrastructure projects that could be energy or outside of that, but, energy, transportation, things like that. So I think that there's a real, both private sector and public sector will to put capital to work there. So seeing a lot of momentum on that front. The last one that I might just special mention to is kind of in health and life sciences. That's a sector too that you see a lot. It's kind of tied in with tech, but you see a lot of interesting activity happening there. Just in my neck of the woods in Eastern Canada, Atlantic Canada, for example, we have a really strong BioAlliance cluster here, pharmaceuticals that have had some real big kind of unicorn transactions, the $1 billion plus type transactions in a relatively small market around here. So you're seeing a lot more kind of eyes on some niche sort of health and life care or life sciences sectors as well.
Very interesting. We're talking earlier about uncertainty and getting to market and going to market and delaying and whatnot. A big impact lately has been the tariff situation. So how has that impacted M&A activity in Canada over the last, since that's come up beginning of the year?
Yeah, it's smoothed out some, I would say. Still a bit of a rocky road of not knowing where everything's going to land. But back in March and April, May, President Trump was, things were still in the early stage of knowing what industries are going to be tariffed. And you sort of were hearing different messages week by week, even day by day, following Trump's social accounts to try to figure out what industries might be hit next. But you started to really realize how integrated our two economies are as well. We, being neighbors and biggest trading partners, there's just a ton of goods and services that flow back and forth between the borders, and you get sectors that are hit hard now, like auto and steel and things like that. And, cities where you might, have cities on either side of a border, same company, but sort of goods having to shift back and forth. So just a lot of complexities with how that would look. But we had deals this year that got put on pause, I would say, not completely die, but put on pause or at least slow down directly related to tariffs because, if 50% of your products, for example, are going down to the States, or you have a couple big suppliers that from the States coming up to Canada, even if those weren't tariffed as of right now because it's covered under trade agreements, just the threat of them maybe being tariffed has caused buyers to hit pause and not want to pursue that until they have more visibility into how that would look. So we had a number of transactions kind of fall into that bucket of having to pause or slow down. Talking to colleagues across the country, I think we've seen the same thing this year, especially in quarter 2, quarter 3, of hesitancy to move forward. Some deals die, unfortunately. Some deals get put on pause that I'm sure will come back around. Yeah, it's really hit home for us. Although we're a massive country geographically, we would have, I think, something like an eighth of the population, relatively speaking, a much smaller economy than the U.S. And really rely on the U.S. as a big trading partner. So it's also hit home for us in Canada that we're not very diversified. U.S. will likely always be our biggest trading partner and ally, just based on being, good neighbors and close proximity. But just like if you're running a business, there's a lot of risk with having one main customer or one main supplier. And if something happens, that's really tough. And we encourage business owners to diversify your customer base, diversify your supplier. Well, same thing sort of applies as a country too, that you need to have some diversification there. And so, one thing Canada, I think, has been one of Canadian strengths is we, I think on the global stage, are seen as a relatively stable, trading partner, play well with others generally. And so, there's a lot of, whether it's Europe or whether it's Asia or whether it's US, whether it's South America, there's lots of people that seem to want to have dealings in Canada, investment in Canada. So we're still seeing a lot of willingness to have activity here. It's just a matter of kind of waiting to see. We're going through a little bit of an up and down rough patch right now while things get negotiated and see where things land. I'm optimistic that will get figured out sooner than later and stabilize that even more. But certainly, to get back to your question, it's had an impact on this year, and it hasn't been a positive impact just because of the uncertainty. Really, anytime there's uncertainty, it's tough on business.
What are you seeing your clients or other business owners? What strategies are they taking? Did they take over the last 6-8 months when the tariff situation changed dramatically? Are they doing anything to kind of insulate themselves a little bit to make sure it doesn't negatively affect the business as much as possible?
I've seen some businesses take concrete steps, yes, to, for example, if you only had one or two main suppliers and they happen to be U.S. based, I've seen some companies take action to diversify that some. So maybe you keep those suppliers, but you look to have a European or an Asian, Canadian alternatives for, if something does happen and you have for example, a 25% increase on your cost base that wipes away your margin, you need to have a different channel there that you can consider. I've definitely seen some customers really that diversification word, try to diversify their supply chain base, diversify their customers. Where I am on the Atlantic Ocean, we have big agriculture and aquaculture industries here, in addition to others. But just to use those as an example, the amount of potatoes that we ship down to the New England states, massive. And as you see some of those channels maybe get shut down or shift, you have to start to look to alternative markets of, are we shipping to South America or, Europe? And there's more difficulties and costs associated with that, but you need to be prepared, if those do get impacted. Like I say, I'm optimistic that most of our goods still fall under current trade agreement, aren't impacted by tariffs, and that as those agreements get worked on, there'll be more certainty and stability on what that looks. But until such time, we're seeing a lot of clients just have to do some hedging and prepare and make sure they diversify appropriately.
What are you seeing as far as M&A transactions? Am I safe to assume that cross-border deals, Canada, US, are not as prevalent over the last year, or am I wrong in saying that?
I think you're right. That's certainly been my experience, what I've seen. Speaking with some others, anecdotally, that's what they seem to be seeing as well. That I've definitely seen some US groups, maybe pull back a little bit from the Canadian market this year, look more home base for investments. Not to say that the tap's totally shut off. Just at a conference a few weeks ago, we had a number of US firms come up and sort of make sure that we still knew that they're actively looking in the Canadian market. So it's not saying that as a blanket statement, but I've seen, generally some shift in, probably Canadian base looking to invest more here, US base looking to invest more there. I don't know if that'll be a long-term trend or if it's a bit of a blip just this year while things are up in the air. I think it's likely the latter, but yeah, it's definitely had some impact on and maybe a bit of a pullback this year.
What about valuation and deal terms? How are those two things been affected over the last,
I'd say on valuation front, there's been some. I talked a bit about interest rate and pressure on valuations and things like that. But I think people often think that's a bigger impact than it actually is. There may be some changes here and there, across the board. But to get back to my point on a good business still transact very well, I think you still see really strong valuations for good, well-prepared businesses. So on our end, we haven't seen, I would say, material, significant changes on valuation. But what we have seen more change on is on the deal terms front. We're seeing, the amount of cash, I would say, at closing, which is usually the most important thing for a business owner, generally going down. So if you had a deal that might have had, 80% cash consideration at close and 20% in a vendor note or some other consideration, we're starting to see the cash amount start to trickle down in offers and other consideration making up a bigger piece. One thing we're seeing more and more deals are earnouts, which is basically future payment, but contingent on certain performance metrics being hit. Those performance metrics need to be negotiated, but it could be tied to earnings, could be tied to revenue, could be tied to gross profit or other metrics. It's not ideal for a lot of sellers, but it is a reality that you're seeing in more and more offers, that particularly if you've had up and down volatile earnings and you're wanting a seller to get paid on kind of the top end or where they think the business is going, and a buyer is having a tough time, getting there on valuation with some of the risks that come with volatility, then the way to bridge that gap for a lot of buyers is we'll structure in an earnout where you get a certain amount of consideration at closing. And then if what you're saying comes true. And if you hit certain metrics, then you have an opportunity to further benefit from that in terms of an earnout. So, we're seeing that in more deals, still the minority of deals, but, whereas it used to be probably under 10% of deals, we're seeing it probably now more like 20% of deals, sort of thing. Vendor notes still extremely common, that you see owners being asked to help essentially finance the deal by deferring part of the proceeds until after close. And then some other things like reps and warranty insurance being used on more deals as a way to bridge gaps. So just all these different factors on deal terms, I would say, are being thrown in more than they were before to try to de-risk things, largely driven by the buyer's side. Not advocating for these things, because frankly, as an advisor, the more complexities, the more deal terms, just make transactions more difficult. It brings in more things to negotiate, more complexities, but it's a reality of the market. Banks and lenders are driving a lot of this too. It's more diligence, and they're looking to de-risk their loans as well. So if there's deferred proceeds, then that's seen as a positive from their end as well. So between the valuation and the deal terms, I would say valuations, some change, but less so. But deal terms, yeah, we're seeing some, changes, generally more creative, complex deal structures in today's market than there was 5 years ago.
You just mentioned diligence too, and I would imagine complex deal structures, being creative on that, and just the overall due diligence process. Is that longer now than it usually is or used to be?
Yeah, definitely not shorter. It's whereas, most groups, the old thing is targeting 90 days as a due diligence. Is kind of a reasonable time frame to, do your due diligence and work on your, put together your lending, or your equity, work with the lawyers on papering everything up into purchase agreements, any tax planning. 90 days and it's still the standard that you see in offers. Depends a bit on the size, but I would say it's rare that you see due diligence, unfortunately, being completed in less than 120 days these days. There's just a higher level of scrutiny and diligence across the board, I would say. You tend to see buyers wanting to do quality of earnings reports, for example, engaging external accounts and advisors to help review financials on smaller deals. So, whereas maybe before you only saw that on 50 million plus, 100 million plus EV transactions, you're seeing that come down market to even smaller transactions. You're seeing more environmental diligence, if there's property involved. You're seeing more commercial diligence, leadership and management audits on the strength of the team. So things like that you're just seeing a higher level of scrutiny there, which takes time. And from the banks, they have their due diligence requirements as well from a lending perspective. And generally, whereas, DD list maybe used to be 10 or 20 requests, you're seeing it build up 30, 40, 50 requests, of items to get through the hurdle. So for any sellers, my advice is just be mentally prepared going into that due diligence is not fun to go through. You're going to show all your stuff, and it can be long and, especially frustrating when you go through all the effort and you can't get it to the finish line, but it is a necessary evil. And I do find, as a last point, that buyer groups who are becoming more efficient at doing that due diligence, and realizing where do I need to really dig into versus where do I not have to, so if you're a buyer group and you can expedite and be more efficient at that, that's a way that we're seeing you as a buyer group coming out ahead. And you're becoming more competitive if you can actually, execute deals faster, give you a bit of an edge.
Jeff, this has been amazing. Great insights into the Canadian market and what you guys are seeing. Really appreciate you coming on the show to go through that. A last question. What are the top takeaways from this conversation, top things you're seeing that sellers and buyers, need to know, need to consider as we navigate the uncertainty that we're facing now and who knows how long into the future?
Yeah, for sure. But my biggest thing, I hit on it briefly before, but is to focus on what's in your control. Every business is different and unique, but there's some of the same and similar steps that no matter what industry you're in or what business you're in, there's some similar steps that can be taken to do things to better prepare you, and make sure that you're getting fair price, fair deal terms, trying to maximize some of those things as best as you can. So it's that feeling of worrying a little bit less around what's outside of your control. We're in a world where there's different the headlines of the day and lots of noise out there that you can get quickly lost in. So it's trying to spend a little less time focused on that and more time focused on what's in your control and one of those steps that you can take. And my advice to anybody is just, no matter where you're at, it's good to find a trusted advisor and lean on them to help prepare you for that. As we said before, Nick, it's you may not think you're going to be at this stage for 10, 20 years, but you never know when that knock's going to come on the door. And you want to make sure you're as well prepared as you can to take advantage of an opportunity that may present itself to you.
Awesome, Jeff. Stuff. Appreciate it. Where can our listeners learn more about you, Confederation M&A, all the great things that you guys are doing?
The best way to find me is on LinkedIn, Jeff MacKenzie, Confederation M&A. Our website's confederationgroup.ca, and on our website has my email address and phone number, and the best way to reach out to me. So hopefully, if any listeners are interested in getting in touch for a chat, I'm always here, happy to do so.
Thanks, Jeff. And they do. Jeff and his team does a great job. They got a great blog section on their website, so go check that out. There's a lot of great information about M&A and the process and all the stuff that buyers, sellers, M&A advisors need to know. So check that out as well. Appreciate y'all listening into this episode. And each and every week, like, share, comment, pass this on to anybody you think might benefit from our conversation here today. Make sure to tune in every week. Every Thursday morning was when we air a brand new episode. And make sure to tune in every week. Take care, everybody. Thank you for joining us on this episode of the M&A Mastermind podcast. And a special thank you to our presenting sponsor, Cornerstone International Alliance. If you enjoyed today's discussion, don't forget to like, share, and comment. We'd love to hear your thoughts. Make sure you hit that subscribe button so you never miss an episode. We'll be back next week with more insights, strategies, and real-life experiences to help you take your M&A game to the next level.